Hi, I'm Jason Smith, Director of CashFlow Advantage, and I'm here with Scott, our Business Development Manager. Today we're going to take a very brief look at the role that overdrafts play throughout Australia in small business, bank overdrafts, and where debtor finance can sometimes fit in there. So Scott, we know there's advantages to having a bank overdraft. One, it's a great line of credit to have. If your business is starting off, it's secured by real estate, you've got a relationship with your bank there, you can get it in place. It might be 50,000 or 150,000. It's great. In your experience, out there talking to small businesses throughout Sydney and throughout Australia, when do you start to see some of the disadvantages of having an overdraft, and where does debtor finance fit in there?
Yeah, one of the key things you see a lot of with the bank overdrafts is that it's maxed out. A business has maxed out their overdraft. So once an overdraft may have been set relatively new when the business was first kicking off, and obviously it's established itself and in growth mode. Yeah. And that's one of the negatives to an overdraft, is that it generally won't facilitate business growth.
Yeah, it's capped.
It's capped. So if you look at the distinct differences between debtor finance and an overdraft, it's simply that debtor finance will allow the business to go where it wants to go.
Yeah. So if we come back to that overdraft, one of the things that we see in our experience is that it's hard to get an increase on your overdraft, isn't it?
And whether the process alone could be a 6 to 8 week process just to have an increase approved or put in place. Most times it can be a simple no, simply because there's not enough equity in the family home. To facilitate that.
Yeah. Well, sometimes a 20-year relationship isn't quite good enough.
Isn't quite enough.
In our experience.
Not quite enough. That'll allow a business, and it is unfortunate.
So debtor finance, the strength there is
it's uncapped.
It's uncapped.
It's an uncapped. It's not a debt as such.
You're not borrowing money.
That's right, and the facility will run with where your business is going. Certainly from our point of view, we work with our clients, where if the client's going through a little bit of a quiet time, we're going through it with them. It's not about meeting this or meeting that, and that line of credit's constantly there, and it's a constant burden. We go through the highs and lows with our clients.
Yeah. So if you've got a $100,000 ledger, you're utilising, it's your ledger, you're utilising 80% of that.
Yeah.
When your ledger's $500,000, you're talking to us, and we're increasing the facility.
Increase, that's right. Yeah. So look, it could be a case of it's coming on to the end of the week, and you've just heard that you've finally been awarded this contract. You're kicking off next week is generally how it happens. It's a simple phone call. Pick up the phone, share with us and operations where you're up to, and we increase the facility. Yeah,
and look, we go through a process.
That's
we
right.
do our due diligence, but we're close to all of our clients, and that process, it's not a 6 to 8 week process.
That's right.
And it's a 24-hour process.
Yeah.
And the strength of our facility is your debtors.
Yeah. And look, I guess if you you're putting the two together, it's real estate equity isn't required, and that is a big
real
plus.
Estate security. We don't need equity in your property.
And that's a big key factor when you start talking of $100,000, $200,000 overdrafts.
The family home's not on the line.
That's right.
Yeah, the strengths of debtor finance. Okay. All right. Thanks for listening and watching. If you'd like more information, check out our website, cashflowadvantage.com.au, or give Scott a call on 1300 557 771.